So here's a question for you. What's moving faster right now? Apple iPhone 17 pre-orders or traders refreshing their screens ahead of the Fed meeting? Either way, it's a big week, and if you blink, you might just miss the action. So before you place your next trade, watch this. Hi everyone, Franco here, your market analyst at ATFX Africa. Welcome back to your daily market brief, where we break down the fundamentals, map out the charts, and keep it sharp and simple. Kicking things off with USD CHF, focusing on the dollar first. The US dollar is currently caught in a tug of war this week. On one side, you've got Trump pushing for significant Fed rate cuts, while markets are already pricing in a 25 basis point cut with, well, near certainty. On the other side, the Fed has to balance soft labor data and a cooling jobs market against inflation that's still providing, well, or still proving to be a little bit sticky. And to this, the recent downgrade of France's credit rating. With under normal conditions could have been, well, pressured by the euro, and yet markets barely flinched, following just how, or showing just how laser focused traders are on the Fed's dot plot and Powell's tone. Swiss franc, on the other hand, remains the ultimate safe haven magnet at this point in stage, up nearly 6% year on year. Investors still trust the franc when the global outlook turns cloudy. But here's the twist. If the Fed signals deeper cuts ahead, the dollar could weaken broadly, which might push USD CHF closer to its yearly lows. If Powell holds back, the greenback could regain traction, especially with Europe's fiscal headaches simmering in the background. Having a look at the charts, this currency pair is currently trading around 0.796, sitting below its 20 and 50-day moving average. The 0.8 resistance remains the main battleground in this scenario. Bulls need to break above this level in order to target that higher 0.807 level, while a slip below 0.795 exposes the yearly low of 0.7872.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Moving over to silver, which continues to shine brighter than a Vegas neon sign. Now, at around $42.25 an ounce, its highest level in 14 years. What's the big driver, you might ask? Well, expectations of lower US interest rates. A Fed cut obviously reduces the opportunity cost of holding non-yielding assets like silver, making it instantly more attractive. But this isn't just about monetary policy anymore. On the industrial side, demand for silver is being turbocharged by global trends such as solar panels, electric vehicles, and high-end electronics. Supply constraints only add fuel to this already bullish rally. Layer in geopolitics, where we have a look at US and China holding talks in Madrid, with TikTok and trade tensions on the table, and silver's dual role as both a safe haven and industrial metal is keeping it in the spotlight. Long story short, silver has some tailwinds from every single angle. Anything from monetary policy, industrial demand, and geopolitics. The only real risk is if global risk sentiment improves sharply, which would reduce the safe haven appeal. Looking at the chart, this commodity is trading firmly above $42. Momentum is staying bullish. Traders are currently eyeing that $42.50 an ounce mark as that immediate checkpoint. And then if that gets broken, well, the bigger picture is the aim for that 2011 high, which is sitting near $49.51. So let's finish things off for today with the NASDAQ 100. Now at around 24,115, this index is standing tall thanks to a cocktail of Fed expectations and tech optimism. The Fed's dovish stance has been a lifeline for growth stocks, with rate cuts translating into cheaper borrowing costs and higher valuations. Last week alone, the Dow, S&P, and Nasdaq all hit record highs as markets leaned into the idea of an easier Fed. Then we have Apple also stealing the headlines. JP Morgan flagged that the iPhone 17 pre-order demand is already tracking stronger than the 16 series, especially for that ultra-thin Air model, which is almost tighter than ATFX spreads. Add in delays in China's due to eSIM regulation hurdles, and we've got a massive supply chain drama sprinkled on top. But the key message here is consumer demand is alive and well, even at, well, Apple premium prices. If we zoom out a little bit, and we'll see that it's not just Apple boosting the NASDAQ 100 at the moment. AI optimism continues to pump air into the tech sector, with Oracle and other firms scoring big cloud and AI contracts. Investors are betting that corporate investments in AI will keep pushing this sector higher, even as the broader economy slows. Looking at the charts, this index is sitting firm above that 23,800 level. Resistance is just overhead at 24,150. If we break that, well, then we could see a potential push to that 24,500 psychological level. But if momentum stalls and the price dips below 23,800, we might see a retreat towards 23,400. With the Fed on deck, this index could quickly shift gears from smooth cruise to, well, high-speed roller coaster. So what should you keep an eye on today and tomorrow? Well, let's just say it's not only the Fed making moves at this specific point. Central banks across the globe are gearing up for their own policy calls. One surprise out of Japan or China or even the UK could flip sentiment faster than you can say rate cut. So stay tuned. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Simply head over to ATFX Africa by clicking in the link in the description below and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.